Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Friday, February 29th. Dell can do better. The company knows it, and so does the market, where judgment has been cast in the form of a lower stock price following Dell's fiscal fourth quarter report. The disappointment over Dell's latest results revolves around its inability to live up to Wall Street's expectations and some cautious guidance for the near term that was pinned on Dell's ongoing restructuring costs and the potential for more conservative spending by its customers. At the same time, the market is cognizant that Dell's results continue to pale in comparison to those of rival Hewlett-Packard, which among other things topped expectations for its fiscal first quarter and raised guidance for its fiscal year. For Dell, revenue increased 10% in the fourth quarter to $15.99 billion, yet its net earnings declined 6% to $679 million or 31 cents per share. The latter includes multiple items that, when excluded, translate to a non-GAAP profit of 34 cents per share. Analysts had been expecting a profit of 36 cents per share. Like many other companies, Dell reaped the benefits of a strong international business. Sales outside the U.S. were up 16% in the fourth quarter, led by 36% growth in Brazil, Russia, India, and China, otherwise known as the BRIC countries. For fiscal 2008, Dell's revenues increased 6% to $61.1 billion, while net earnings increased 14% to $2.95 billion, or $1.31 per share, up from $1.14 for fiscal 2007. In the most telling line in the company's press release, Michael Dell conceded the company still has much work to do in terms of improving its cost structure and competitiveness. The encouraging consideration there is that there is still plenty of room for improvement. To wit, Dell's operating margin rate of 5.6% for fiscal 2008 is approximately 300 basis points below where it was at the end of fiscal 2005. Increased competition from the resurgent HP, as well as from companies like IBM and Apple, will make the turnaround process all the more challenging, particularly in an environment where concerns abound about a slowdown in IT spending. Fortunately, Dell has the right person at the helm, its namesake founder, to steer the company's turnaround process. It isn't going to happen overnight, so investors are going to need to have patience with the stock, which continues to underperform. We'd continue to hold the stock if you own it, but would hold off on new positions for now. I'm Pat O'Hare for Briefing.com. Thanks for listening.